So today's top three things in my notebook. Number one will be oil. It could really be number 1, 2, and 3. But again, number 1 is oil, number 2 is Russia, and number 3 is Italy. Now, oil first. Let's just kind of go into this breathtaking move for those who are not prepared for the deflation. As my friend Hemingway would say, it happened slowly, then all at once. So again, this is also called more affectionately a crash. Again, as you see this really manifesting across not only energy stocks, but energy bonds. Don't forget that a large percentage of the incremental high-yield bond market is related to the oil price. So again, it's an inflation expectation that is deflating. We have no immediate-term trade support to 63.86 on WTI. And again, the more important point is that now resistance is just north of 71. So again, it's 71, 72, 73, 75. A lot of companies, guess what? Can't either pay their dividend and or make money in energy land, and that's the point. Point number 2, Russia. Big problem in Russia. Now, a lot of people would say because it's not happening in the S&P 500 futures or something like that, that they're navel-gazing at it, doesn't matter yet. Now, again, I actually heard David Rosenberg, who's a reasonably good risk manager, say this is a lot like 1998 to the good side for Americans. This is a buying opportunity or something like that. This is not 1998. Newsflash, that's when you had nominal growth of over 6%. You know, this is called a worldwide gong show. That's what this is. Again, centrally planned markets with the Russians under their underground at this point. The ruble is down 6% since Friday, down 40% for the year to date. The only thing that looks like 1998 is called a foreign currency crash, Mr. Rosenberg. And again, that creates interconnected risk across a lot of things, which are not the least of which Russian stocks. Russian stocks down again over 3% this morning, down 32% for the year to date. Now, finally, last point is Italy. What could possibly go wrong with Italy? They had to report the economic data. That would be the main problem. So again, the economic data in Italy continues to suck. Now, Italy has a recession. And again, you can look at that for what it is, which is bad. Down 0.5% year-over-year GDP for the third quarter. And all the economic data in Europe continues to decelerate in rate of change terms. This morning, from Italy to France to Germany, you saw sub 50 on the November readings of PMI. So again, Mr. Draghi has not been able to take Italy out of a recession. He has not been able to create inflation expectations. That's why deflation is the number 1 position you should have worldwide in your global macro book. And those are your top 3 things.